If you guys are tired of watching your trade hits full TP after you got scared and you had anxiety and manually closed it out, you need to learn from me and learn from what I did today, because today I perfectly sat on my hands, could have easily closed this trade out here for break even, close it out here when it was consolidating, but I didn't. I sat on my hands and I just trusted my original analysis, which is what many of you guys need to do too. No more break-even trades, no more taking profit because I don't want to lose it on the day. If you don't want to lose the money on the day, you shouldn't be taking trade in the first place. So with that being said, let your trades hit full take profit and full stop loss, and don't move them whatsoever. Just let it hit full TP or stop loss no matter what, because in the long run that will benefit you the most. That will be the most profitable in the long run. So with that being said, I'm going to go over the trade recap on the day, show you guys exactly what happened and why, and also the best liquidity sweep and easiest teller on daily bias. It is so far 100% success rate. Maybe I had one day where it didn't go right, but it's genuinely the best teller. And let me show you guys my chart right before this of what I was looking at during the market. So this is what I had before. As you can see, it's a lot going on, but I will break that down right here for you guys. I'll remove everything right out of the way and start at 15-minute time frame before market opened. So before market opened, zoom out big time, right? You see all this big crash pre-market from yesterday. So we are down a lot, but as you can see right at this point, okay? So the week opening gap of last week, not even like this week's week opening gap, but last week's week opening gap, it never got filled. Yes, it came down here. It tapped into this big empty space, but it never got filled completely. So with that being said, we wanted that to get filled completely. And this is the biggest teller of liquidity and the biggest and easiest confirmation on bias. So all we're looking for is it to fill this gap completely. So at this wick high, not here, but at this wick high, right where it closes and then opens, that's where it wants to get filled. So with that being said, this is a very, very, very strong draw on liquidity just over time. And as you can see, I've had all this time to put market orders here, or limit orders, not market, and have that be bullish. So it's going to sweep and go higher. So with that being said, I didn't even need to look at anything else on the day. I was bullish on the day, but with implementing volume profiles, we typically look at the last 5 days. So today is Tuesday. We are going to look at market open right before Tuesday. So I like to go at 9:15 till now. And as you can see, the big distribution curve in main 70% of it is up here. Not much going on, right? That's not very relevant to what we're looking at today. So with that being said, I will leave that because there is some important information that we do need to look at for later. But for now, not much going on. So with that being said, going down to the 1 minute time frame, looking for longs. Okay. So at this point, market opens right here, big move down. We swept out the lows of the previous week opening gap. So now we're looking for longs. So what do we look for on longs? We're looking for any sort of like manipulation or continuation to go higher. So I count value area highs and lows and the POC range, and then also fair value gaps, low volume nodes, order blocks, whatever it is, as continuation. And then we need to see a displacement through a series of 2 candles. So right here, we see 2 candles down. We needed to see a displacement higher through that and close above the candle high or low. High? I don't know. but needs to close above the candle close. So at this point, it could have been a long opportunity, but because it was so early in the morning, I did not want to take it. It was just 9 minutes into market open. So I sat on my hands and waited for another entry. And at this point, I could have entered, but then the market pushed higher even more. And by the time I was about to enter, I would have entered around this point here, which was too high for me, too much of a skewed risk to reward. So I was waiting, just hoping for a little bit of a drawdown. And at this point here, we draw down into a equilibrium range. This wick taps into equilibrium, which is a good continuation trade for me. And then I wanted to see a displacement higher. And because there's not a series of 2 candles on the red candles, we go higher to the next series of 2, which is at this point here. So we needed to see a close above the close of this candle, which obviously we got with this move. And for me, that's a displacement move. So right at this point, I entered, and I enter after the close. So the next candle it was around this point that I entered. Price was with stops at the wick low and take profit. You might have been thinking here, my take profit was at this point here. And you're like, why would you set it there? There's nothing there. Like, even look back to the past. What is at this key level? Not much happening, right? So with that being said, zooming out into the 15-minute back of the previous 5 days, we go back to the volume at this point here. And as you can see, there is a big high volume node at this point here. So I did not see that originally. Originally, I saw this little high volume node here, and I had stops at the start of it. So I had stops at this point on the graph. Originally, that's what I thought it was going to do because all this volume was so small at the time of taking the trade. This big curve was not there. So I put it here, but then I realized I zoomed in more and I realized that there was a little bit of a bell distribution curve there. So we were already in the high volume nodes. So I moved my stop loss. This is the only time I will move my stop loss is if I missed an analysis. So I went back and I saw that this point, it was around there, was the peak of the high volume node. So that's where I set my stop loss after I already hit it. And I'm not going to lie, price came up, it hit that. I was like, okay, I rejected it pretty well. There had to have been something there. So then that's when I went and looked back and saw that. So then I moved my stop loss down to put it at the high volume node because that's where it should have been originally. That is the only time I would have moved my stop loss. So with that being said, that was here, let me bring that back. That was a perfect 1 to 2 risk to reward. That was perfect. I wanted to get off the chart, sir, but I was like, no, I really think market is going to go higher here, right? So I stayed on the charts and I waited for a better or another entry to go higher, make even more profit on the day. But at this point, after this trade, I did have to close that out for profits on Tradeify because of the consistency rule that they have. So after this point, I was strictly trading on my take profit trades. So that is not the trade I showed you at the beginning. So the trade that I showed you is next trade. We have one more trade to go over. So my next trade, because this was a high volume node, right? We know that this is the peak of it. We were perfectly respecting that high volume node. Like, we weren't blowing through it. So I actually did turn bearish on the day and I was looking for shorts. And you might think, how did you take a loss here? There's perfect shorts here, right? So I'm honestly wondering the same thing. But as you can see, We had a good short opportunity here, but I didn't take it because I wasn't quite bearish on bias at that point yet, although that would have been the best trade for a what would have that been? If I entered here, let's say, stops at the highs, take profit at where I had take profit originally, that would have been a good 1 to 3. So, yes, great trade, but I guess just manual error there. I don't know. I wasn't quite bearish. I wasn't sold yet completely. But when we broke between these lows, that's when I turned bearish. Kind of just. So here, let me backtrack on that. So just eyeballing it here from what we saw before, this is a high volume node at this point here. Let's say, obviously it's not perfect, but this is where the high volume node was, and because it was respecting it perfectly, after I did see this move down and then move up, I was like, okay, we're not going to be bearish. We're still looking for longs. But then we saw these 4 candles down. I was like, okay, I genuinely think we're bearish. I was looking at Trade and there was huge, I was just watching the market, and there was huge bearish momentum and a lot of market orders for sells. So with that being said, I was looking for sells at that point. And then here, because it was after the candles, we had a little manipulation, and then we had a displacement to the downside, a displacement of the series of up close candles, the two. We had a displacement below it. So at that point, we entered, and I believe did not get a great entry here. We got an entry. Price was about there when I entered. Stops at the highs, and targeting. For take profit, I always do a start of a high volume node as my take profit, but it looks like volume profile won't show it. But I was targeting this, the start of this high volume node. So let's say it's about there. It was about a 1 to 6 in the moment. I don't know where it was exactly because this is volume till now, not till when it was before, because TradingView won't let me do that for some reason, but it was around a 1 to 6. Take profit was about there. As you can see, I got stopped out pretty quick. That didn't scare me away though, because I'm like, okay, big move up, right? So you might be thinking like you should stay bullish looking for longs with that being said, but no, I was still looking for shorts, especially because we had a manipulation at the highs. And then we had a big move, displacement lower. So at this point, I'm reacting to the market, not predicting it, which is my main thing that I need people to do. And we had a displacement lower. As you can see, there's 2 green candles. So that is a good entry point. So with that being said, I entered, and my entry point was around here because it came up first. Stops at, because it's such a big candle, I needed to not have such a bad risk to reward. So I had my stops at this wick. This is a fair value gap here at this point. So with that being said, I had the stops at the high of that. And targeting, you see this low volume node in the volume profile, targeting the high volume node, the start of the high volume node, which is about here. This is the high volume node. So I had my take profit at the start of that. So maybe this isn't like showing what it was before risk reward. It was a 2.5, I think. So maybe I got in there. I don't know. I don't know exactly where, but it was 2.5, 2.2, somewhere in this area. I don't remember exactly where, obviously, but take profit at this low. No, it wasn't. Sorry, I'm kind of all over the place. I needed to get that out of the way. Let me put that back so you guys can see it. So I didn't have take profit at this high volume node, at the start of this high volume node. I had take profit at this point here, and you might be thinking, why? Why did you do that? That doesn't make any sense. Well, at the time, all of this volume in this big distribution curve right here, that was not there. So it was actually right here. My bad. That was not there. So that is new data for me. But at this point here, I know it's hard to see right now. Let's say looking at the data right now, I would set my stops to the start of the high volume node, especially because the value area low is right there too. But at the time, the value area low was also at the start of the high volume node, which was at the high of the wick of this red candle here, which is exactly where I had it. I did, maybe it was a later entry. I don't remember perfectly. Oh, that's where it was. It was at the low of this candle. So it was a 2 to 3. That's what it was. Perfect. Finally got it after all that time. But take profit at the start of the high volume node. And I sat on my hands. This was, I don't know why I removed that. But this was probably my best trade of the day. So for today, I could have easily, yes, come up. I was thinking it was going to stop me out pretty quick. I would have been okay with that because before you take a trade, you have to be okay with the losses, right? So with that being said, I was okay with the losses. But when we saw this big move down, I was thinking about all the profit that I could have. And I got into that mindset, which I know a lot of you guys have. And if I took it out there, I would have had a 1 to 2. But I didn't. I sat on my hands. I could have moved my stops to break even here, got stopped out, and missed this entire move lower. But I didn't. You sit on your hands. You let your trade hit full TP. You let it hit full stop loss. That is the best recipe for maximizing your risk to reward. And the cutoff between win rate to risk to reward is not even close. It's not close. Like win rate might go up 5%, but risk to reward will probably go down a full 1. Like let's say you have a 1 to 2 risk to reward, then if you move your stops, it will move it down to a 1 to 1 even. It's crazy like that. So over the long run and just having that strategy, it's way more profitable to just sit on your hands and let it go and hit one of the two. So that's what I did. You kind of just got to keep that in mind. So this was honestly my best trade today. I was 2 for 3 on the day on my Take Profit Trader account. I'm only risking a fourth of the account right now. And with the past losses and the big mistake that I had last week, that's not much. So I'm only risking about $300. So today I was up $900 on the day for Take Profit Trader. And as I said earlier, I wasn't trading on Tradeify because of the consistency rule. After the first trade, I wasn't trading. So, yeah, but pretty juicy day today. 3 trades on the day. Great trade, or great trades in general. But the main takeaway I will say is 1, sit on your hands. I know I've said this a lot, but you need to just let the trade hit full take profit or stop loss, no matter what, no matter how good of a trader you are. I don't care. And then 2, the draw on liquidity on market or the weak opening gap of the market, that is the best draw on liquidity ever. It has the best biases ever. I will say the switch from bullish to bearish, looking for shorts there, was a great move for me. But that was kind of a thing that you need to have for awareness, and the volume profile gives for you. So that shows the value that adds there going forward. But great day on the day. First trade, I did move my take profit down because I had a wrong analysis and I didn't see the little high volume node there. That was on me. I should have noticed that earlier. but going forward, I will be much more aware on that. So that's what I need to do. That's what I did well. Hopefully you guys can learn a lot from that. That is it for the trade recap. And some of you guys may know that we do a verse of the day at the end of it just to put God first. So that's what we are going to go into. Nothing long, just like a minute. Verse of the day, little lesson on the day from God. And putting him first, putting all glory to God, and putting him as our main priority. So with that being said, the verse of the day is Amos 5:24, and Amos 5:24 says, "But let justice roll on like a river, righteousness like a never-failing stream." So what does that mean, right? The way I take it is righteousness is like a never-failing stream. So if you have righteousness, you're never failing. It's like a stream that's always going. But the never-failing part is the biggest part that I take away from it. Like, righteousness is never failing. So if you have that righteousness and you have that, the morals, it's a never-failing stream because God will have your back on that. So that's kind of how I take it. If you guys take it any other way, let me know in the comments below. But just have the righteousness, have the good set of mind, treat people as Jesus treated people when he was alive. That is the main thing for this that I take from it. Maybe you guys would say something differently, but I would love to hear you guys' opinions on that. But great trade recap for the day. Hope you guys learned a lot from that, and I will see you guys in the next trade recap.